Hey guys, what's up and welcome to a new Tesla update video. So today, as per usual, let's go over Tesla, let's go over the market, let's figure out what is happening and what we can expect, moving forward. So with all that being said and done, as per usual, if you enjoyed the video, don't forget to hit that like button as it does help a lot. I do appreciate it quite a bit. This is not financial advice. I'm not a financial advisor. And of course, my membership section on YouTube is live. The link is down below if you're interested. For just $2.99 a month, you get access to my intraday thoughts, posts, updates, etc. throughout the day. A lot of posts today as well. Options flow, which is a paid service. You essentially get it as a bonus, if you will, here for Tesla. And sometimes other stocks as well. So yeah, if you're interested in that, again, the link is down below. We'd love to have you, but nonetheless, let's just jump right into it. Tesla closing the day ever so slightly green, 0.16% on the day, closing at just shy of $200 per share, which is going to be unfortunately a bit of a underperformance compared to the market that is up about 2.25%. So not crazy, but a little bit of an underperformance, ever so slight, like a smidge. But nonetheless, there's some important things to talk about. So the first thing I want to talk about is kind of, well, what the hell happened today? We just kind of sold off the whole day, right? And this is what I actually told my members pretty much right in the morning. I literally just woke up out of bed and I was looking out on my phone and I posted it. I think it was this one right here. Pre-market, we are just shy of 205, but that is where we rejected not too long ago. Intraday, or I was actually wrong, but it wasn't intraday. It was also, I think it was pre or post-market. This needs to break to see 207 to 210. Otherwise, the day may start with a retest of 200. Well, look what we got. We pretty much got a retest of 200, right? And the reason how it's interesting is because you can see, right? The second I opened up my phone even to look at how the market's performing and how Tesla's performing, the first thing I see instantly is bang, this little situation that we found ourselves in right here. Almost a perfect rejection at the exact same level that we rejected all the way back here, actually also pre-market, back on the 16th of February. So pretty much the exact same rejection level, right? And you can, and you start seeing these wicks appear. You start seeing the selling pressure pre-market appear. And it starts making you realize that, yeah, that is going to be an area of potential rejection. And, we need to break above that in order for, well, Tesla to really make its way to 207 to 210, which technically is still a possibility. I don't think it's out of the cards yet, but I'm a little bit neutral here. And I'll explain more as we go on in the video. But all in all, we got rejected by that, and we obviously sold off for the rest of the day and pretty much came right back to retest this overall, green rectangle right over here that I had before that we had the impulse breakouts just yesterday, right? We had the impulse breakout, had the little mini bull flag, had a gap up, and then we pretty much just sold off for the rest of the day, closing off in a very neutral fashion, I would say. Very neutral fashion. Again, not really bullish, but not really bearish. By the way, this is going to be something very spicy I'll be talking about with options flow today. Very, very interesting to say the least. But let's finish off the technical analysis here. So the way I look at it is, actually, let me bring it up one more time. There's one more thing I want to talk about here quickly, which is technical analysis related, of course. Let's go ahead and remove extended hours. It's going to be this, right? One thing that's, I am kind of eyeballing right here for now that I also, of course, mentioned to my members the second I saw it, and pretty much before we even had this rally, I'll show you guys here really, really quickly. This one right here. See, right as we had the rally, this was before the rally where I talked about we're potentially bottoming out here. Anyway. Is the potential head and shoulders pattern. Again, it's a 15-minute head and shoulders pattern. Nothing to sweat about necessarily, but nonetheless, a potential head and shoulders pattern where we have the head here, the left shoulder here, and, now seemingly the right shoulder here. The way this works is pretty simple. If Tesla ever pretty much breaks below, I would say about 198. If we lose 198, I would say, this head and shoulders pattern becomes valid. And, there is a very real possibility that it'll be, again, just a very rough movement from here all the way back down to 192 roughly, which will be the bottom of the channel actually that we'll talk about really soon on the daily, right? However, if this ever goes above, I would say 202 at least, ideally 203 to be like more confident, but at least 202, that's where it starts to question and potentially even completely void and nullify this bearish head and shoulders pattern. So that's something to keep your eyes on moving forward for tomorrow and honestly the rest of the week, really, to see how this plays out. I want to mention that really, really quickly, right? So that's, potentially bearish, right? So keep that in mind. That's important. Now, as we kind of sold off, we came down right over to this, area. Like I said, we had that impulse breakout, right? We retested it and bounced off almost perfectly. And then we pretty much came back almost to the same level once again, as we're now sort of just really chopping between this overall area, right? And again, the way I look at it is pretty simple. If Tesla ever loses this green rectangle, essentially where it's been so far bouncing 2 times now, right? The impulse breakout plus the double support now, old resistance turns support. If we ever lose this, right? So again, closing below 200, not ideal, but that's more of a psychological thing in my opinion. I don't really think it matters that much that we close below 200. It's just a psychological number in my opinion. What matters to me again is really, do we close below really 198, like do we lose 198? If we lose 198 and maybe even lower, like 197, if you really want to be like, you know, lenient about it, if you will, like if we lose 197, that's going to be, you know, a little bit questionable. I'll be honest, that's going to be a little bit questionable. This potential momentum, this potential impulse breakout on this momentum up here will fade pretty quickly, and it's not going to look as great anymore. I'll be completely honest. That's going to start looking potentially, you know, not necessarily bearish just yet, because don't forget, we still have, of course, the support of these the two lines over here, the orange and the yellow gold line, which is the 21 EMA being the gold line, yellow line, and the orange line being that 30-day moving average we've talked about, right? We still have those as support under us, right? The 21 EMA being at 197 and the 30-day moving average being at about just shy of 196. So we still have those below us, but it does complicate things if you do lose that level, the 197, 198 level, because it does start making the structure a little bit more questionable overall. So it'll just make things more complicated, I guess is the way I'm trying to put it, but not necessarily fully bearish just yet. But let's take a look at the overall picture, right? This is where it's important to kind of, you know, okay, that's intraday stuff. That's day trading stuff, which I did day trade. I did, and I told my members this as well. I did sell everything I had. I don't remember where it was, somewhere down here. I talked about here, right here. Took profits on my shares plus bought back my cash secured puts pretty much as the market opened, right? When we were still trading around 204, right? Pretty much sold everything. And then I scalped today, right? As we pretty much came down to retest this, I bought the shares back again, sold almost near the top of this. I was actually happy with that. And the reason I sold up here was because it could have went a little bit higher. But like I said, 202 was the area that I was looking at as potential resistance. I don't want to risk it up there. This was good enough for me because the market pumped, right? Apple pumped here as well. And the market kind of pumped a little bit there. So I decided to just take profits, not really risk too much. And then obviously it continued falling back down. So that was nice, right? But you know, it's important to kind of zoom out and take a look at the overall picture here. And the overall picture is pretty simple, honestly. The way I look at it is this. Like I said, I'm pretty neutral here. I'm not necessarily bullish here, but I'm not necessarily bearish. I'm very, very neutral here. And the reason I'm very neutral here is for several reasons. Let's talk about why I'm slightly bullish and why I'm slightly bearish, I guess, because they kind of cancel each other out. But the main things I'm looking at. The reason I'm slightly bullish, pretty simple. And I said this right here. I'll kind of just read what I said, honestly, because I literally just made this post like right before I started recording. We're still holding above the 21 EMA and the 30-day moving average, which are these two lines that I talked about right here. We're above the green rectangle on the 15 minutes, which we just talked about as well, which is good, right? Those are the main things I'm looking at that are good. That's nice. And, you know, ultimately we are closing higher than we're closing today higher than where we closed yesterday. Good signs. Not convincingly higher, it's ever so slightly higher, but higher nonetheless. So some good signs there, right? There's definitely some bullish aspects there, but some bearish aspects. Well, you know, we're still under 200. Like I said, it's more psychological, but psychology sometimes is important when it comes to the market. The market short-term is emotional, right? That can affect things. Lost most of the gains today, so overall a weak day, right, where we pretty much just sold off for the vast majority of the day and closed somewhat close to the lows of the day, while the market, you know, not looking too shabby, right, looking pretty decent. The market actually did quite the opposite. It started weak, ended strong. SPY started weak, ended strong. Tesla started strong, ended weak. So, you know, a little bit questionable on the momentum there, right? And the upside is somewhat limited with the 207 to 210 resistances. This is where I look at the overall picture. This is why I talk about how I'm kind of neutral. Best case scenario, realistically, for now, until we, you know, break some levels, is going to be the top of this kind of, you know, this line right here. You can kind of see, maybe I'll make it a different color. Maybe it's hard to see with this color. I'll make it like, I don't know, yellow, I guess. This yellow line right here, right? Roughly. I moved it back. So let me go ahead and move it back, right? Pretty much we're like right near the top of it, right? We're right near the top of it. Not too much more room to the upside, at least from where we opened and where we peaked for the day. Excuse me. Not much more upside movement. So that's what I'm kind of saying, where we're in limbo land, where it's either what happens first. Do we break above this yellow line? Do we break above the gap fill, right? Which, let's say if that happens sometime maybe late this week or early next week, right? That'll kind of line up with this line. It'll give us some room and it lines up pretty perfectly. Do we break above 207 to 210? If so, great. That means, I think, you know, at least in my opinion, more upside potential has been unlocked. Maybe 220, maybe as high as 230. For instance, we have these red lines here. If you take the bottom of the channel, which we've had for the whole time, right? This bottom channel, red line here, right? And you replicate it. Just make a parallel line up here, which lines up with these two spots right here. It opens up the possibility of what can be potentially a move higher, right? Like I said, up as high as 220s up here, as high as even 230s, all the way up here, sometime mid-March potentially. Not impossible. Absolutely not impossible. However, for that to even be an option, we'd have to, A, break out of this bear wedge. So this is a bear channel, the red lines. The yellow line with the red line is a bear wedge, right? We'd want to be breaking out of this bear wedge that has so far been acting as a pretty respectable resistance. No questions about that, right? We want to break above that and the earnings gap fill, which again is around that 207 to as high as 210-ish area. That would need to break in order to unlock 220, 230, maybe even 250. Who knows? But that, in my opinion, is not even worth talking about until that level is breached and now turned into a support, from resistance to support. On the flip side, we're not too far away from also potentially turning bearish. The support level is right below us, 21 EMA, 30-day moving average, not too far below us, just a few dollars below us. Not a lot of wiggle room there. On top of that, we also have the bottom of the channel, which again, regardless of the way you want to look at this, whether it's the bear channel with the red lines, whether it's the bear wedge with the yellow and the red line, it's a bear pattern. Now, it doesn't mean it has to play out in the bearish form, right? In terms of, breaking to the downside, but that is a very real possibility. And we're not too far from it as well. So we're kind of like in between right now. We're like right dead smack in the middle from upside move for a potential beautiful breakout, right? Maybe like a 3 to 4% from there, or potentially, about a 3% to the downside. That can potentially also be bearish. So we're right in the middle. And I'm personally right now, the way I look at it is Tesla, at least until one of these directions is really, really picked, it's a scalpers and or option sellers market. Because right now, I think, there's decent potential that we just kind of chop. We just chop in between this area until we pick a direction, until we truly, truly pick a direction. So that's the way I kind of look at it. That's why I'm kind of neutral. I still have my sold puts. I opened up fresh ones. I bought those back pretty much near the high of the day in my shares. I'm out of shares again because I scalped the shares, right? But I am holding cash secured puts just at a higher strike now, a little more of a, I believe I changed it to 195, right? I used to have 185s, bought them back for like an 85% discount essentially. So gains essentially of 85%. And I bought back and I opened up new ones for 195 for this Friday. Mainly because if we break 195, to like 183, it's already turning bearish, and I'll just take the loss on those shares on that play. That's fine, right? I just don't think we will. I think it'll take some time. I do think some chop will happen here, but the main thing I'm personally eyeballing right now and that I'm waiting for is really what happens. Do we chop down sideways for a while, and then do we break downside? Do we chop and then break to the upside? That's what I'm waiting for, and that's what I'm going to be playing for. And again, as is just doing a whole lot of nothing, selling options is great. That's a stall going sideways is the perfect time to sell options, at least if you expect it to go sideways, because theta just decays away at it. People are just gonna be buying calls, buying puts, whatever, trying to pick a direction, trying to, be smart, thinking they're smarter than the market. Well, I'm just sitting here collecting my premium, not really worrying about too many things whatsoever. That's the way I'm looking at it right now. So that's the overall picture. Now, obviously, if we break to the upside, like I said, 220s, 230s, potentially even as high as 250s, which is a retest of this upper channel, a possibility. On the flip side, if we break down below, which is going to be below the 21 EMA and the 30-day moving average, and also below the channel, which will probably coincide by the time if and when it happens, which will be somewhere around the 195 to 193-ish level. Of course, it'll depend when it happens, right? Because it's a rising channel. Somewhere around there, though. If we break to the downside, that at the very least, in my opinion, means that we'll double bottom at the 180s, if not make a lower low. Now, the last thing I want to talk about that suggests some potentially extreme bearish movement is this. So whenever Tesla was kind of falling, there were some bulls that were stepping in, as you can see here. Now, the thing that really, really scares me, the thing that honestly makes me a little bit uncomfortable, if you will, being a bull here on Tesla, is this. So around 10:30 a.m. today, a lot, and I mean a lot, like look at this line right here, a lot of bearish whales came in. 2.1 million, 100K, almost 200K, 500K, 600K, 200K, 300K, 300K, 1 million, 400K, 400K, 350, 360, 176 came in almost at the same time, like one after the other, like every 30 seconds, they just kept piling in. Right now, granted, it is a 150 put, so it's pretty darn low, right? That's quite a way away from here, right? 150 put, that's a decent move to the downside if we get a 150 put move. Let's say from here to the 150, that's about a 25% drop. That's pretty sizable. That's, keep that in mind. That's important, right? Now, granted, this is for December 20th of this year, so they do have 10 months roughly of time that they bought. So it doesn't mean it has to happen tomorrow. It doesn't mean it has to happen even next month, but they expect it to happen. And as if that was enough, it kept going. It just kept going. More bearish puts here. 1.1 million, 1 million, 170 put, June 20th, March 21st, all the way over here. This may have been taken profit on already. That is a possibility, but keep that in mind, right? And then even more over here. Also, the exact same ones, 150 puts. December 20th, 200K, 700K. Like a lot of these December 150 puts came in today, like a substantial amount. Now, again, there's time, but man, it's hard to ignore that. Like that makes me a little bit, okay, well, that's kind of interesting, right? So some word of caution there, I guess, some word of caution. But all in all, that's the main things I'm seeing right now. So let me know what you think down below, ladies and gentlemen. But thank you so much for watching. If you enjoyed and found this video useful, informative, helpful, whatever, don't forget to hit that like button. But I'll see you tomorrow. Peace.